This series is supported by Apollo Global Management, a leading provider of alternative asset management and retirement services solutions. Apollo seeks to provide clients excess return at every point along the risk-reward spectrum and is focused on empowering retirees, building and financing stronger businesses, and driving a more sustainable future.
How investments will work out over time, I think, is a probabilistic issue, and one doesn't really know, but it depends on many factors and defies a concise explanation. But people need a concise explanation. People need that hand-holding. And I thought, much like human health in ancient times, right? People didn't understand it, but people listen to shamans when it comes to human health. And, now we need someone to pretend to know exactly what's going to happen with our investments and to perform this important psychological function. And it took me a while to learn and appreciate the importance of this. Also, when launching new products, when talking to internal clients, just have more empathy and separate the probabilistic nature of investment from how to deal with management and clients.
I'm Aoife Devitt, and welcome to the 50 Faces podcast, a podcast committed to revealing the richness and diversity of the world of investment by focusing on its people and their stories. I'm joined today by Uwe Schillhorn, who is Program Director at Emerging Markets Investors Alliance and has just left his position as Chief Investment Officer of a Chicago-based public fund. He previously was CIO at Principal International Americas, where he managed the investment teams and developed the business in Latin America. Prior to that, he was head of emerging markets debt and a global bond portfolio manager at UBS. Welcome, Uwe. Thanks for joining me today.
Thank you, and Merry Christmas to you, Evan. It's a pleasure to be here and to participate in that podcast series. And I listened to some of them, and I'm impressed by the caliber of people that participated. And I very much enjoyed learning about their different experiences, insights, and surprises. And I hope I can give something back today.
Well, I look forward to it. We've spoken before about your time in Latin America, and that just fascinates me, as well as your insights from being in a stint in the public fund. So let's kick off with your background. Can you walk us through where you were born, where you grew up, and your path into the world of investing?
Of course. So I was born in Germany, and I grew up in a small rural community in northern Germany by the North Sea. I started becoming interested in investing at the end of the 80s when I was still in high school, and it was completely by chance. I walked by our regional bank and saw a flyer about using chart analysis for investing. I had no idea about investing, about chart analysis, about anything. And I only had a few $100s, but the client advisor was very keen on talking to me. And I suspect he probably had no one else that was interested in this and would listen to him until I walked into the door. So I was a victim too, I guess. He spent a lot of time with me explaining chart analysis, and I was eager to learn. I was fascinated by the whole investment thing, and I ran and walked down Wall Street right away. And I was eager to get involved and to apply my newly acquired wisdom here. And I opened a brokerage account at the bank, which was totally easy back then. There was nothing you needed to do. I mean, it's different today, of course. I remember trading options of some Italian chemical company from a public phone during my school break, actually. This would probably not be possible today, but back then there were not the same compliance rules in place as today. And I discovered that it was, of course, doing trading, that it was quite difficult to actually make good money. But I was hooked to the whole thing. But back then, I did not know anything about the investment industry by itself and how could this actually lead to a profession. This was in my head. It was just investing. It was just the fascination of investing. It wasn't really connected to a profession in my head. I actually wanted to be a lawyer that knows about investments. So I studied law and economics, and I studied. So I grew up in the northern part of Germany by Denmark, but I studied in Freiburg, which is in the southern part by the border of Switzerland and France. And there at university, I met a lot of Americans. And I was fascinated by their mentality, by their culture, and I wanted to come to the US. And I was lucky because the economics department at the University of Freiburg, where I was, and the economics department of the University of Wisconsin in Madison had a program that enabled me to continue my studies in Madison. And it was very good because lots of the people that I met were from there. So I already had a roommate when I moved there. I kind of had a group of friends already when I got there. And in the US, then I learned more about the investment industry and knew then that I wanted to do something with international investments. But this did not happen right away. After finishing my master's degree in economics, so I dropped the law thing, I have a small degree in law, but I just continue with economics. Then my first job was at a German regional bank. And this was about investing, and it was interesting, but there was nothing international about it. And I remember cold calling many bigger banks, institutions with international investments. And it was hard to get in, but then some of my former fellow students, they worked in the emerging market group at Swiss Bank Corporation and told me that they were looking to launch an emerging market debt fund. And those were early days in emerging market investing. And there weren't many people with a lot of investment management experience in emerging markets. So I got the job despite a lack of experience in emerging market. And I got the job as a portfolio manager to launch a Latin America fund and to manage a European convertible bond fund. And I was at the right place now. I loved it. And actually, some years earlier, Swiss Bank had bought Brinson Partners in Chicago, but then finally they wanted to integrate the emerging market teams. And I wanted to come back to the US. So I strategically kind of gave up the management of the European convertible bond fund because there was no match here and concentrated on emerging market to get the chance to be invited. And that happened, actually. I was then offered to join the emerging market group at Brinson Partners in Chicago. And I took it and came over here.
So that's so interesting how your Latin American experience started almost by opportunity, in terms of that being an area to evolve into. When you look back at the course it took, and I also studied law initially before moving into investing, will you say that there were surprising turns built in there?
Yes, I think so, because when I study economics is presented as a very science-like subject, or at least it was back then when I studied it. It was all about rationality. It was about probabilities. And as an economist, I think one learns to think about probabilities or improbabilities. But I was surprised by how inadequate that whole concept of probabilities and rationality is to actually convince people and to do the client work and to build a business. People dislike the unknown, of course, and crave for an explanation and want somebody to hold their hands. And this was not clear to me when I started. And it goes beyond investments, I think, and is a general fact of life. But I had no empathy here. It was just all about numbers and statistics and economics. When investing in emerging market, back then at least, it was especially relevant because to convince somebody to invest in countries and companies far away, it needed some hand-holding and convincing. It was different now. Like the world is so much smaller and the information is so ubiquitous, but it wasn't the same thing back then. So when there was an issue in a country or company the fund had invested in, the client advisor actually needed to hold the hand of the bigger clients to explain, but the client advisor, of course, he himself did not know this deeply enough. So he needed the analyst or portfolio manager, which was me, to explain what was going on. But I didn't know the matter firsthand either and talked to the respective analyst at the investment bank to hold my hand, basically. And he or she was generally in New York and didn't know firsthand either, and talked to the political or economic consultant in the respective country. And that person then, from maybe having had lunch with a member of Congress or having met a CEO, told the analyst that all was going to be fine or what was going on. And we all held kind of each other's hand and felt good about it. And how investments will work out over time, I think, is a probabilistic issue, and one doesn't really know, but it depends on many factors and defies a concise explanation. But people need a concise explanation. People need that hand-holding. And I thought, much like human health in ancient times, right? People didn't understand it, but people listen to shamans when it comes to human health. And, now we need someone to pretend to know exactly what's going to happen with our investments and to perform this important psychological function. And it took me a while to learn and appreciate the importance of this. Also, when launching new products, when talking to internal clients, just have more empathy and separate the probabilistic nature of investment from how to deal with management and clients.
It's so interesting. And my last podcast guest, not yet published, but she spoke about her insights from being thrust into the kind of heyday of Chinese M&A back in the 90s. And I said, what was your takeaway from that? And she said that people are really just all figuring things out, that there's actually a lot of improvisation that goes on, particularly in the frontier markets. And that'll bring us, we'll return to that when we talk about your experience in emerging markets, but very interesting. And also, I think what you're saying highlights the importance of trust and that trusted relationship, that confidence. It's a good segue into your core investment beliefs. So given this belief in the importance of probabilities, the fact that we need to get comfortable with uncertainty, but we also have to communicate and have clients get confidence in us. What would you say your core investment beliefs today have centered around?
I mean, I think it changed over time, of course. And when I think about it, investments have so many different dimensions, such as, time horizon, meaning of volatility, liquidity, goals such as sustainability or impact, and then the type of analysis that can be applied. And there are many different tools and approaches to navigate all of these dimensions and situations. And I think the task is to match the right set of tools for a given situation with one's own skills or talents to use them. I think that's often underappreciated, that this match needs to be there. Not everybody is equally talented for the same kind of approach or tool or model or whatever you take. Many investors and analysts, I think, that pride themselves with looking at long-term fundamentals. And I think that sounds often very appealing to clients and relates to what one usually learned about during one's studies. It's very scientific, it's very solid. But to make this a successful strategy, not only does the market have to be willing to react to fundamentals within the required time frame of the client, what the client feels comfortable, but one also must have the skill to forecast the fundamentals correctly. And I think that's a skill an economist obviously hopes to have, but not too many people actually have that skill. It's very difficult. So I'm a big believer in working with data and in having just a coherent process. But what data to consult and how to design the process depends on one's skill, I think, and the problem at hand. And for instance, there's no answer to the question whether a poem or a painting is the better piece of art. Obviously, both artists work with certain techniques that can be learned, but a good artist needs the right skill for the medium. And that's what makes him an artist, right? Otherwise, he would just be a craftsman or so. And it needs to fit the situation. And I think it's similar in investment. So as a result, I'm quite agnostic. To me, what produces consistent performance as the result of a thought out and repeated process is fine for me. That's what I believe people should do. There is no right way. It has to match your skills and abilities.
We're going to take a short break to hear from the supporter of this series, Apollo Global Management. I sat down with Joe Moran, Managing Director, Institutional RIA Sales at Apollo. I asked Joe what values united Apollo as a firm.
Apollo is in the business of empowering retirees, building and financing stronger businesses, and driving a more sustainable future. Apollo's high energy, entrepreneurial culture is centered around fostering innovation, challenging convention, and driving collaboration.
And now back to the show. Just translating that into the public fund arena. So your most recent role was at the helm of a public fund with its own challenges. I mean, outside investment targets, et cetera, there's obviously the challenge of funding levels, et cetera. What would you say was on your mind today at that? What were your priorities and goals in the DB scheme?
Yeah, so it was a defined benefit pension plan, right? So which is, it's a dying class, but many public plans are still defined benefit plans. And one thing here is that a defined benefit plan knows the liquidity needs and the liabilities very well. And therefore, there are way fewer uncertainties than in the environment of mutual funds or individual investment mandates, right? There are people change their minds and want their money back and so forth. In a defined benefit plan, clients can't leave you. So they don't have access to their pensions for a long time. But at the same time, they have a right to a certain pension that implies a certain performance. So that makes it very different, I think. And therefore, in my opinion, concept of liquidity or volatility require a different meaning than in other parts of the investment world. I think that's often underappreciated because these jargons are just used all the time, all over, but they carry very different weights. A pension plan can, in theory, harness the liquidity premium of private markets like private equity, private debt, real estate, infrastructure, much more than other investors could. And when one looks at data from public markets and private markets now, in the public markets, they show that past performance is not a good indicator for future performance. And everyone says that, and it's kind of a conventional wisdom. But in private markets, many rely on past performance, and it seems to have worked also until recently. So this is different, and it doesn't make sense that it would be different in private markets. At least it's not obvious to me. But now things are also looking to change in private market. The newest data has some different results. And of course, lots of shamans are offering their help. And I was in desperate need of hand-holding and some analysis here. And shamans apart, the task is, I think, to manage to the long-term goals with the constraints of a pension fund in mind, and looking beyond conventional wisdom in all of this, and at the same time, to be able to convince the board that often consists of non-investment people. I think that's the core challenge here.
Yes, you certainly highlighted that. And I think one of the interesting challenges of a plan like you were CIO at is obviously the fact that it's open. So you talked about uncertainty at the very beginning of this, and the uncertainty as to the magnitude of liabilities. There's no way of, with a pinpoint accuracy, zoning in and zeroing in on what those liabilities are going to be and matching them. And you talked about the shamans. I've also been CIO at a public fund, and my experience there was that very few had actually had much experience with the funding levels that some of the Chicago funds faced, some of the negative cash flow characteristics, and they really had no playbook at all for that kind of scenario. It didn't fit with the theory or the academic playbooks. Yes. So exactly. Really interesting uncertainty. And then, as you mentioned, the needing to target growth because there's no other way to get to that liability gap, I suppose, without having growth in the portfolio and tolerating illiquidity. So lots of challenges, and thank you for laying them out in those terms. One of the areas we focused on as an area for growth when I was at the helm of a public fund in Chicago was emerging markets. Timing may not have been ideal in that any time in the last 15 years, emerging markets probably have failed to deliver on their promise. Would love to hear now about not only your views on emerging markets, but also your takeaways from the time you spent there, because I do think that being on the ground probably provided some very valuable insights into maybe distinguishing theory from reality.
So now when I deal with emerging market, I'm at the Emerging Market Investor Alliance now. That's obviously a very different take because it's an NGO, right? So we're not actually investing in emerging markets. So what the Emerging Market Investor Alliance does, it coordinates emerging market investors to better leverage their muscle when advocating for sustainable policies in the companies and countries they invest in. And now I think with global interest rates now much higher than, in the past, and the liquidity glut is gone for now, emerging market issuers need to do more to attract capital. At the same time, many asset owners, especially, pension funds, and especially pension funds, I think, in Europe, they're keen to have sustainability play a bigger role in investments. And for sustainable investment, this is a good match of incentives, right? So the emerging market issuers need more money and people want more sustainability. And the emerging market issuers are now more willing to listen than they have been in the past, especially because money is harder to come by and because it can also reduce borrowing costs, right? And increase the pool of available capital. Chile, where I lived for 6 years, especially has embraced sustainability. And I think part of the reason is mining and agriculture are important sectors in the economy. And obviously there are lots of environmental issues in these sectors. They play a very large role in these sectors. The country is also well enough organized to be an example for other countries that had issues, sustainable linked bonds, and it labeled bonds, and made its health sector more resilient. So it's a good example. It embraces, Chile has embraced this, the sustainability in general. And during my time there, I traveled extensively to Mexico and Brazil. Even though the Chilean economy had already lost some of that incredible growth momentum that it enjoyed during the earlier decades, it was still a beacon of safety and stability when I got there in 2016. And that status was severely challenged by the widespread violence that accompanied the social uprising in late 2019. And this came as a big surprise to me because living there, and of course, it's a pretty class-based society, and the people that do well, the professionals, they live in one part of the city. But that's the fact in US cities too. But it seemed very stable, and I didn't see this huge violence. I didn't see this coming at all. And no one did there, basically. And I was shocked how a place that seemed so relatively peaceful could descend into violence that quickly. So it really shocked me. And I saw it as a regional Chilean thing, basically. I was there, and then, why did this happen there? And people analyzed the history of Chile and all of this, But like a few years later now, looking back at it now, it more fits kind of a pattern of social instability and violence that has occasionally erupted in many different places in the world, the US included, France, and it just felt different there because in Chile, the whole life and everything is concentrated in Santiago, and you just feel much, much closer to it. Yeah, and that was different.
And just before moving on to discuss sustainability, which I think is key, because certainly that's the zeitgeist that we're all participating in and writing right now around investing, especially in the public arena. Just want to go back to that because a similar thing happened to me. We traveled to Peru this past year, and we were almost not about to travel because there had been that eruption of socioeconomic unrest then as well. And that was also quite sudden. I think had taken many of the incumbents by surprise there. But of course, this is what we're supposed to be paid for in emerging markets. We know there's geopolitical risk. There's supposed to be a risk premium built into the returns there. And it's really always been thus, given the markets are all grouped together. I suppose the challenge has been not always being compensated for that in recent years. Do you see with the current, I suppose, some of the institutions, you mentioned Chile being organized, and I think I've heard that it is an organized society there and things run on time, that institutions have been well tested, that perhaps we tend to paint the whole segment with the same brush when there are quite a lot of differences between countries and their growth prospects?
Yes, I think in Chile, the institutions have been tested. And when one is there, I was desperate when I was there, looked at the violence. And of course, I thought the institutions don't work, right? When you're there. But then what's the benchmark? Some ideal in my head. But when I then see how other countries handled it, it was done well. I think, in all of this chaos. And I must say a big compliment to the Chilean population also, because what some people thought the way out of this was a new constitution. The constitution there was formally introduced by the dictator Pinochet like 20 plus years ago, but it had been changed 70 times. It had been signed by a democratically elected president. And when I read it, I'm interested in this stuff. I studied law also for a little while, right? And I compared it to other constitutions. I thought it was a good constitution. It had nothing to do with the ailments of the country, why people weren't happy. It was just implementation of good policies that had, of course, no constitution is perfect. And there are probably some things that could have been better, like water rights or so. But all over, this was not going to fix the issues. And then they suggested a new constitution, which was a typical Latin American emerging market constitution, where everything is written on the constitution, all kinds of different rights that don't help, right? People know that already. If you have a constitution where everything is spelled out, that's not going to make anything better. And people rejected the constitution. And I think that new kind of left-wing project was rejected, and the people were mature enough. And now the conservatives took another swing at it to have another constitution. And that was too far right, and people rejected it again. So they get stuck with a constitution that I think is good, and they should just stop doing that. But I thought, in general, this was a big sign of maturity there of the people of Chile, that they went through this without really destroying their constitutional backbone.
So interesting, this concept of the pendulum swinging back when it swings too far one direction, right or left. Yes. And I think we're seeing that in Europe too. And it's one of the kind of positive, I suppose, developments, a little bit of a backlash against some of that nationalism and far right politics that was developing. So interesting to watch whether equilibrium prevails like it does in nature, which brings me to nature and sustainability, ESG investing. I'd love to talk maybe in the context of the Emerging Market Investors Alliance and your experience in Latin America. We've heard a lot about sustainability driving agendas in Europe, now Australia, etc. Not so much in the US yet, but what's the story of sustainability as it plays a role in investing in Latin America?
I was in Latin America from 2016 to 2022. And in the beginning of my time there, it was very early days for including sustainability into investments. And it just started to gain traction. But then Chilean pension funds, for instance, they started incorporating it into their decision-making. And people started talking about it also in Mexico and Brazil. And Brazil is an important focus of our work in the Emerging Market Investor Alliance today. Under President Lula, sustainability is much higher on the priority list than it was under President Bolsonaro. This is important for the whole region due to the sheer size of Brazil, right? Brazil is just so enormous as a country. And then Emerging Market Investor Alliance, I established a program for education, health, and human rights. And to me, improving education is like applying leverage in investments. And Brazil is hugely important, not only when it comes to responsibly dealing with the environment, but also when dealing with social issues, especially education. In the US, where we are talking about integrating minorities better into the professional world, into the investment worlds, or into leadership positions in general. Brazil is actually majority Black. Many people don't know that, and I learned it there. And Blacks are completely underrepresented in professional careers in Brazil. So the task is huge because it's providing better education to the Black majority of the population, not to a minority, so that they can advance in the professional world. And I expect EMIA to be very active in Latin America and especially in Brazil.
That's so interesting. One of my own personal mottos is that knowledge is power. And I love that idea of education as leverage. I'm going to work on that and just see how we can apply that, especially within financial literacy and just empowerment and trying to diversify our profession. I'd love to go to some personal reflections now. So you've had a very varied career, lots of different places, lots of different focuses. Have there been any setbacks or challenges in there or investment mistakes that you've learned lessons from?
Of course, I think, especially at the beginning, I had the tendency to be too impatient with markets on one side, but very patient with people. And when investing, I didn't want to miss the action, basically. A good high school friend actually often joked that I had to go to all three parties at a given night, no matter what. And I think some of that crept into my investment style too. In some cases, my fear of missing out has been bigger than my fear of losing, leading to buy too early or to do too many things. On the other side, with people, I sometimes had been too patient, kind of hoping that the situation would remedy itself somehow, instead of taking a more proactive steps when making changes. And with time, I've become more patient with the markets, and I'm more willing to bite the bullet early instead of hoping that management issues resolve themselves with just a little technical adjustment.
So interesting. I know buying and selling different. Often that's people time that differently. And I guess that's the impatience conundrum, that we tend to be patient with what we've bought and maybe impatient about buying again, but reticent about selling. Looking at any key people who were influential to you along the way, anyone that you can name that made a particular impression on you?
Yes, and this may be difficult for Americans kind of to understand, but you have to remember that I grew up in Germany, right? So it's a different society. And back then, it was a much more stable society. And the first person that I want to name is my middle school teacher. And my teacher had been a plumber for many years. It's very unusual. At the time in Germany, it was not usual that a plumber becomes a teacher. To become a teacher, he had to do 3 years of additional schooling, then 5 years of university, and then 1 year of internship. And he did all of this after having an already a blue-collar life or job that paid very well. And I guess, especially today to an American, this may not sound like much, but to me, it opened the perspective that it's never too late to break out of a traditional path if you set your mind to it. And then I think in the second one is my first boss at the emerging market group at Swiss Bank Corporation. And I was still quite junior. And my boss had a lot of technical knowledge that would guide me. And he was a passionate and good investor and eloquent in explaining what mattered. And I learned a lot from him. But I also learned from his failures. He was buried with administration, management issues, client work that often made him miserable. He failed to delegate some of these tasks that naturally came to him first because he was the head of the group, but he enjoyed them less than the investment relating tasks. And I took notice and planned to empower my colleagues and to delegate some of these tasks that were typically associated with the team leader when I was a team leader myself. And the time came, and when I was head of our emerging market group, the group had grown a lot, and there was a lot of strategic work to be done. But there were also lots of client work and other administrative responsibilities. And our institutional clients wanted to talk to a portfolio manager that was actually involved in the management of their portfolio, and not to some client relationship manager or client portfolio manager. We didn't have any of that in our group. But I had a senior PM in my group whose strength and interest was on the client and administrative side of things. And we then redesigned her role, and she took a lot of that type of work off my shoulders. And she was also the face of our group for our largest institutional client. I mean, I had to be willing to give that up, right? But it was a very successful concept, and we both were happy about it.
Wonderful reflections. And funnily enough, in our own middle school, there was just an article about a social studies teacher who started out as the janitor at the school. And I think his trajectory took the same length of time as your middle school teacher. And it was a remarkable story of passion, commitment to learning, and also the school district that invested in him by allowing him to go back to school and retain his janitorial duties. So I love these stories. Really, it's the ultimate social mobility in action. My last question is around a piece of advice that you received that maybe made an impact on how you work and see the world, or alternatively, any creed or motto that you live by. Anything you can share there?
So I never really had a mentor in the classical sense. That boss that I talked about in the previous question, I was very junior, but he wasn't my mentor. So, but I generally think the impact somebody can make on the way you work and on your career depends on where you are in your career, right? What are you willing? What are you able to learn from that person? And I had people that I reported to that I learned a great deal from, or that advanced my career, and others that I learned a lot less from, despite them being very successful. So how I see the world is a fruit of my experience, obviously. And one of these experiences that kind of guides me is that generally organizations aren't loyal. People are. So just because someone worked for 20 years at a company doesn't mean that he or she can expect any type of loyalty if the people that she worked with aren't there anymore. People, on the other hand, tend to be quite loyal. And if you treat them well, they will try to help you. And it could be in a very distant future, in another place, but that day will quite certainly come. So my motto is to treat people well, but not to base my self-esteem or my, who I am on any specific job title or organization.
And would there be any advice you'd have for your younger self, anything you wish you had known as that young student coming out of Germany to study in the US?
Yes, and I learned that also over time from some of the junior people that I hired and that I interacted with. And I think ask for things early on when you need them. People do that now, and I think it's very helpful because a no answer only hurts you if you let it hurt you. That's up to you, right? So you can always dress up, even if it's a no, you can always dress up the request differently, wait for a better moment and ask again. But I think bringing it out there, openly communicating it is very important for everybody because you don't want surprises. Like you don't want people not being able to express what they really want and you think they want something completely different, which is not true then.
Well, thank you so much, Uwe. I will keep that image in my mind of you party hopping in your high school days to that third party of the evening, because I think that perhaps resonates with me because I have a similar FOMO when it comes to social occasions. And in a way, I think it's merited because in life, professionally as well as personally, you never know when you're going to meet that person that will change your perspective and that will enrich your experience. So I think keeping an open mind is always important. And it's perfect that we recorded this at the end of the year because it has summed up so many principles that run through this whole series, whether it be the importance of networking, the importance of a principled approach to the relationships that we build. And I love in particular your reference to education as leverage, because the very essence of this podcast is providing education, helping us to learn from each other's experiences and each other's setbacks, hopefully to build a more fruitful career for everyone. So thank you so much for rounding out the year for the podcast. We'll be releasing this in early 24 and for sharing your insights with us.
Thank you, Evan. It was a pleasure. And it was also, thank you for introducing me to this podcast series because I'm going to listen to some more and I enjoyed the ones that I have listened to so far.
I'm Aoife Devitt. Thank you for listening to the 50 Faces podcast. If you liked what you heard and would like to tune in to hear more inspiring investors and their personal journeys, please subscribe on Apple Podcasts or wherever you get your podcasts. This podcast is for informational purposes only and should not be construed as investment advice, and all views are personal and should not be attributed to the organizations and affiliations of the host or any guest.